everybody. So as it stands on Wednesday afternoon, we still have about 30 minutes left in today's session. The markets over the past 2 days, they have moved through that definitive pullback. All right, I want you to think about what I've been speaking about over the past 2.5 weeks in terms of psychology. Obviously, right now, it's very easy to be bearish on the markets as a whole, right? That is the easy thing to do. It's easy to succumb to that of the fear, the bit of the sort of the panic mania, which is sort of gripping that of the markets at the moment. It's not easy, of course, to remain, or at least to stick with that of the technical point and also the fundamental underpinning of these markets, especially when you see, again, over the past 2 sessions, the market closed down pretty much, depending on what you're looking at, very close to 3%, if not slightly over. But again, I just wanted to point out a couple of very important things, right, when it comes to chart analysis. First of all, we've been speaking about the gap closures, all right, on the S&P 500 down here around this critical area of 2,930. Yes, we have overshot that again with 30 minutes left in today's session, 2,893 points. We've overshot it now by about 40 points, but more importantly, and pertinent to what we've been speaking about, it really has been that of the Dow Jones Industrial Average. It has been the final market of the three to definitively close its open window. Yes, we have overshot it. Okay, it's a bit of an art, not an exact science, but as it stands, we are still yet to even come close to that of the August lows, right, across the board on the US financial market indices. That is going to be the first critical piece of analysis right there to really warn us of something larger, right, which is underpinning this market or slowly ticking away underneath the surface of this market. Still very firmly, I believe that we're not going to encounter such a problem whatsoever. It really wouldn't surprise me whatsoever to see over the past, couple of sessions to really just get a very quick reversal off from essentially wherever we close as at the close on Wednesday. That is point number one. We're still making a series of higher highs and also higher lows on the market. Right, if you go back and think about 2019, the market year to date is still up very close to 20%. Yes, it has pulled back from those, past historical highs, and most recently anyway, earlier in the period of September. Here we are in the month of October, and it has been a relatively, bearish start. The good news is that essentially right now the markets, they have closed their open windows. We've gone through the final hoop, and now, we're just waiting for the first reaction off from, that general vicinity, whereby we expect the market to essentially print at that next higher low. So again, the majority of market participants are still swinging from side to side, okay? Think about that ship in the ocean. They're still jumping, right? Although the volatility in the period of September, it started to sort of wane down. It has obviously spiked here in the first 2 sessions of October. But again, that boat is continuing to rock. Right here from this area, however, is where we expect it to stabilize. It seems hard to imagine at this particular point with the market down as much as what it is today. Again, the print at the moment is down 447 points on the Dow Jones Industrial Average. This was after a sell-off of over 300 points yesterday. But again, this is exactly where we would expect, right, the sell-off, which we have encountered over the past 2 days, to really run its course, okay? Yes, we have to allow a little bit of leeway, again, a little bit of a continuation to the downside. However, what we are still yet to really retest, right, is that of the August lows. And as such, we're still a number of percentage points away from that support area that has held up, which has firmed up, which is built, right, really throughout the midst of the entirety of August 2019. And as such, again, we're looking for a very sharp V bottom out of this area. It seems a little bit crazy. I understand that. But again, it's something to think about. What is interesting also is if you take the other side of, I guess, the analysis, is that the difference between yesterday and today's session, obviously there are gaps, and this is looking like an island reversal now to the downside, okay? It does make a little bit of sense based on where it's sort of showing up in the location terms of the chart itself, up and around resistance areas, but I really wouldn't be buying into that all that much at the moment. There's been another sort of shift, generally speaking, since about the midpoint of August. We've seen the gaps, and the gaps have occurred in the bullish direction most recently. If you flip through a bunch of these markets, okay, you're getting these original gaps. But this is really the first bearish gap that we've encountered. You have to go back on at least the Dow Jones, or at least even the S&P. Let me flick on over into this chart. Since we've started to see some pretty big, gap downs during the period of August as we were rounding out these this bottom over here. So again, if you wanted to go back, it's even pretty much at the beginning of August. So I mean, we're going back really 2 months now to actually see that of a bearish gap. This gap here, it will be filled. But what I'm saying is that once this gap does fill, depending on when the support area does show up, and when we see this reversal above to make that establishment of that next higher low, what we're wanting to see is a market that doesn't gap, that is just slowly grinding higher. That would be fantastic to see. Again, a little bit of a stretch of the imagination at this particular point now that we've seen a gap in the opposite direction. You can see the NASDAQ again, it's still firmly holding up around this sort of very slight sloping support area at the moment, but there is that general pattern of that island reversal. It generally doesn't take as many sort of candlestick sessions or daily sessions to actually present itself. Generally, when we look at unreversal sort of patterns, you're looking at probably at most out of a week's definition of charting activity. But as such, again, these markets, if you flick on over into the oscillating indicators, they're really sort of blowing out the cobwebs in terms of them coming back down and at least moving back into oversold territory. That is the chart of the NASDAQ. I've now just moved over into the Dow Jones. You can see the RSI. It's already really pushing down into that extreme oversold setting on the RSI, and we're still yet to actually definitively come down to the support area. When I flick on over into the S&P 500, just to show you this, you've got the support area down here below 2,850. Here we are about 2,890 points at the moment. But again, the RSI, it's already tagging into oversold territory on this chart. The MACD is taking a turn down. The Stokes is pushing back into oversold territory as well. In my opinion, again, based on the analysis that we've been performing for years and years and years, this is still nothing, all right, to worry about. This is nothing to be concerned about. This is another pullback amidst that of a larger macro bullish uptrend, which at this particular point, it is still intact. And as such, you should be looking at this market as another opportunity. I mean, this market has really been blessing you with an abundance of opportunities to actually jump back in at these sort of distressed prices when the market itself is trading at a discount. This is another opportunity to do so. My humble opinion is that this is going to turn out to be a pullback and a very quick rally, which is going to take out these all-time highs. If you look back historically in the period of 15-16, a very similar sort of instance happened as well. And this is setting up really sort of perfectly to do such a thing. The first critical break, okay, of a technical change in the picture itself is going to be a break of the August lows, which again, I'm not really expecting at this particular point. We'll obviously see how Thursday plays out on Friday. And more critically, that of May. All right, they are going to be, again, the big warning signals on this market if it is definitively going to push lower, maybe to retest this macro low over here. But again, that is a major sort of stretch of the technical picture at this particular point. Up and around the period of September when we were coming back on up to retest these all-time highs or get very close. We spoke about three patterns, all right, or three possible outcomes. The number one outcome that we were talking about was the gap fill, all right? Yes, we've overshot it. All right, but we also spoke about psychology and how it's going to be, or at least the sentiment of market participants is going to shift abruptly. That has happened. That began to happen yesterday. It's only been exacerbated during today's session, but I wanted to remind you of that discussion that we had prior to this bearish move. We've been expecting this bearish move. Here is the bearish move. And there's a couple of things naturally that you're going to do, all right, or want to do. Number one, you can jump on in most likely with the majority and turn bearish on this market at your own detriment. Or again, you can think about what we spoke about and as such begin to again nibble on positions at this discounted rate. Once you see that reversal show up, which is yet to play out, as at the close on Wednesday. But that is what you want to be paying close attention to. It's taken a bit of time. Yes, it's taken a couple of weeks longer than what I originally thought it would after we saw this gap right here at the beginning of September. But now that we've closed it, now comes the most important part of the retest, the back test, and hopefully the reversal reaction off from pretty much these current prices that I'm bringing you on my chart at the moment. It's very early days, okay? Nothing is definitive or set in stone yet. But if you do see that market response, if you do see that market reaction, if you see the markets rallying off their lows or at least beginning to price in that of outside candlesticks, sort of a bullish white soldier or one white soldier, so to speak, any of these piercing patterns or counterattack patterns, it could even turn out to be that of a hammer or a tweezer bottom. Okay, I'm just running through variations right now as to what you'd want to see up and around or above that of the August low. That is going to be a massive, right, hint mixed with the oscillators firming up, right, if I can bring up the right template on my chart, that this is going to be that next pillar in the wall upon which the market is going to find its rising area of support. So I understand right now there's probably, as I'm speaking, there's going to be a few comments of the bears poking their heads back on up as they sort of do from time to time when the markets encounter that of a pullback. But I just wanted to remind you, think about what happened in the fourth quarter of 2018. Think about every other moment whereby this market has pulled on back down. And then obviously just have a look at what has happened next. Obviously that dynamic is going to shift at the moment. However, nothing is warning us or nothing is telling us, right? And we pay very close attention to this, especially with some of the key metrics underpinning the market, fundamentally speaking. Nothing is shifted enough, right? Even leading economic indicators to suggest that this is going to be that of anything more of an intermediate correction that we're currently going through. At the moment, it's sitting on the minor level, okay, in terms of a daily swing sort of operation. But again, the next couple of days, Thursday and Friday in particular, also moving into the following week, they are going to be critical. So again, paying very close attention to this, looking for a natural reaction or response off from this general area at the moment. Now that finally The Dow Jones has closed its open window, which is fantastic to see. Yes, you cannot discount the fact that it has overshot this, but again, the easy thing to do is jump in on the side anyway of the bearish crowd short term. But again, I think and I believe based on the fundamentals and the technical picture that is going to be to your own detriment once the market stabilizes, once the volatility now is sucked from the market, and there's a good chance that this is going to occur once we settle. All right, and what you're going to want to see is the market itself climb, but not climb with these original gaps that we established out of the period of August. If you see that, there is not going to be a turn down again if and when we come back on up into this resistance area. As long as we do not set up gaps in the bullish direction, right, to discount, of course, or to negate what has been a 2-day sell-off yet, the market itself is not going to look back. It's not going to need to fill any of these open gaps that have presented themselves since the beginning of August, and is going to set sail on the market breaking above these all-time highs. It seems hard, or you might be sitting there scratching your head saying, well, how are you coming up with this? All right, if you have a look, not to suggest that you will, but we have a look at this from time to time, right? Through some of the key metrics that we follow, they are resilient, they are hanging in there, and they're still suggesting that this has got ample time, right? If you're willing to at least forward date those option expirations into the future, most likely 2020 and beyond, to take advantage of what this market is offering you in terms of its most recent pullback at discounted rate prior to where we have been historically. All right, so I'm going to leave it at that. As at the close on Wednesday, I'm going to be paying very close attention to how the markets play out during Thursday's session and obviously Friday's session. But try not to find yourself in the majority right here. Try not to succumb to that of the panic and the fear gripping the market at the moment. And as such, step back a little bit. Okay, remove the emotion from trading. And as such, it's offering you a fantastic opportunity, right, to reposition some of these trades. What I'm going to do actually in this video is bring down, if I can actually move some of these triggers at the moment, right, down to the height of the gap support, 2,940 on the S&P 500, on the Dow Jones Industrial Average. This is being moved down just to the top of the gap support as well, 26,590. These will shift again once we do see a reaction off from this area. And on the NASDAQ, I'm going to place this trigger just above the gap resistance at 7,914. We are looking for reversals down and around these support areas, all these high lows that are established as at the close now on Wednesday. But this is going to be a process, okay? It's going to be a process. Don't lose faith, okay? Don't lose sight of this market moving higher in the grip or in the midst of that of a pullback, which is still establishing that of a higher low as it stands. If the analysis changes, we will as well. But I've done my best to warn you that this was in the pipework, all right, that it was coming. Here it is. We're in the midst of it now, and there's no reason to change your analysis. I've been warning you about this and trying to at least speak to you in terms of psychology and how not to succumb to the emotion of the markets when things get a little bit heated. This is a prime example of that, right? We've forecasted this. Here it is. Now you've got a choice to make, all right? Do you jump on board with that, right? Bearish directional trade. I would strongly encourage you to reconsider that thought if you are, even though, again, it's easy to sort of make the argument to do so. Or are you going to stand firm, resilient, resolute in the analysis, right? And allow the markets themselves, once they settle, to slowly over time, if there are no gaps, to take out not only this little sort of structure resistance up here, say at 27,000 or just above on the Dow Jones, but to ultimately break above that of the September highs and going back to also the July highs at some later point in 2019. It's going to be very interesting to see how this plays out. But again, all right, it seems to me that this is repeating a history itself. Short term is repeating, especially during the midst of the Q4 2018 and 2019 pullbacks. And at this particular time, there's no difference whatsoever. All right, I just wanted to make that very clear. Those trolls out there who want to write some comments, go for it. That's okay. It's not going to change the analysis whatsoever. It's not going to change the evidence, right, or the fact-based approach to this market and non-directional biased approach to the market itself. Again, we've been talking about the pullback. The pullback is here. It's nothing out of the blue. It's nothing surprising. And again, I hope that talk a couple of weeks ago on chart psychology or trader psychology is firmly in your minds, and you're just not succumbing again to what is most likely a very emotively driven sort of sell-off at this particular point. Largely expected. Here it is. Now we're going to have to allow the market itself to reveal itself around these critical support areas. And I believe, again, it's going to be a very firm reaction to the upside once this settles. Okay, so there's my warning for you. It's good to see finally the markets jumped through all of their hoops. But what we want to see, all right, are no gaps and a very sort of smooth trickle out of this support area once the market settles. I can't be any more clearer than that. Okay, I cannot be any more clearer. Breaking it down and just giving it to you in sentences or sound bites like this, that is exactly what you want to be looking for. All right, that is exactly what you want to be looking for. All right, so that's going to do us as at this Wednesday afternoon market recap. I'll be back with you tomorrow, most likely, for another market update. It is a very critical time, precarious time where the markets are positioned and how they are positioned. But again, don't lose faith, don't lose hope. This is all very much so expected, okay? And an opportunity, again, whereby the market is offering you, right, a discount to enter. All right, so that's going to do me as at this Wednesday afternoon market recap. Again, we'll start it anyway about 30 minutes prior to the close. Probably have a couple of minutes left. I'll see what that updated version of the chart is. You'll see that in the next video. But again, watch for that reversal. It's going to set up most likely very quickly. All right. On that note, everyone, enjoy your Wednesday evening. I'll be back with you later in the week for another market address. All the best. Farewell.